Good morning, everybody. Happy Tuesday. Welcome back to the Daily Profit Plan. Let's get started. Let's see here. Markets finished up yesterday. Gap up, push up, ended up falling towards the end of the day. Gold and silver had some pretty big days. Looks like some shooting stars. Not calling the top. That's silly. But we'll watch some price action closely. Let's have a look at the charts and everything this morning. We had a full winner on engineered options. Nice to get that under our belts with 100% winner. We've got two more pending, live trades, but pending close on Friday. If we can stay above, I believe XSPS stay above 686, SPX is stay above 68.75, and right now we are still just climbing our way right back up towards these recent all-time highs. Which on SPX, this is the like the CFD feed. The high is 69.98. If you go to the actual SPX opening bell, closing bell, the high is around 86. So let me set one of these many chart alarms. Set this chart alarm here to 69.87. Check this candle. This high is 86. This high is 85. So right there, 85, 86 highs. CFD feed, I believe the high was 98. So let me set a chart alarm. This is right before all the major earnings hits. We have big earnings tomorrow and Thursday for some of the Mag 7 companies. Let's see, Meta. Is it Meta, Microsoft, and Tesla? Meta, Microsoft, Tesla, and Apple this week. Amazon is not on Thursday. So Amazon will be first part of February. NVIDIA will be, I think, later part of February. That'll bring in most of the Mag 7. I've got a Newsbreakers trade for Netflix that expires Friday. I've got Microsoft with a couple of butterflies that expires Friday. We'll see if we get options push into like the 490 to 500 zone since Microsoft's been on a bit of a tear. It's been interesting. I mentioned this in it was in Telegram yesterday. Go to FinViz and look at the heat map for yesterday. So 53.7% of stocks declining, and yet the market was up. So 42.6 advancing, but look at some of the names that were advancing. We have Tesla down, I think over 3% yesterday, 3.09. Meta's up 2%, Google up 1.57, Apple 2.97, creeping up to 3%. NVIDIA flat, but technically down 0.64. Broadcom up, some semiconductors in red, Micron, AMD, Intel. Intel's had a pretty nasty decline the last couple of weeks or so. Microsoft up, Oracle up. So some big, large market cap names leading the way. Market breadth has deteriorated a little bit, but not much. So we're at like 70% S&P above the 50-day and 66% of S&P above the 200-day. NASDAQ 57.4% above the 50-day and 59% above the 200-day. So, for the most part, look, breadth is okay. I'd say the S&P is showing a little bit more signs of this rotation. Obviously, it's a much larger index with 500 companies, and it's diversified and not just heavy in tech like NASDAQ. But, is this overbought or anything like that? Not really. We still have room to push higher. If I'm looking for some short-term protective tops, we'd want to see like 90+% of stocks, above the 50-day moving average. And we want to see this concentration, same thing here on the 200-day moving average. If we're, really concentrated, really bullish, if sentiment is extremely high, then maybe looking to take some profit off the table. So we will see. What happened to my Walmart feed? Why isn't Walmart? Do they change the... That's weird. Apparently this ticker. All right, that was my watch list, but apparently I got a bad WMT ticker. Anyway, Walmart 117. Costco, nice rebound off the lows at 846. I'm just selling some options on these. Home Depot, below these lows. Lows, same thing. Below these lows. MasterCard, Visa, credit delinquencies and rising concerns on American household debt hasn't stopped MasterCard from hanging at all-time highs. Visa, same thing. Like MasterCard, Visa, pretty similar. American Express, your kind of top spenders a little bit higher up. I mean, this is a pullback during Liberation Day, up 75% from those lows. Here's your Liberation Day on Visa, up 24%. Big difference. Johnson & Johnson, just nuts to the upside. This is why, I mean, if I'm playing certain sectors this year, XLB, basic materials, XLE, energy, XLI for industrials, XLF, and I'd say XLV. I'd put those together because, well, actually, XLV is healthcare. That already had a bit of a run, but still solid. And XLF, which would be financials, deregulation restrictions reduced. So XLB, what is the race right now? Industrials, energy, materials, right? This is hoarding. Anything you can do to accumulate as much scarcity as possible. This is what companies are doing. So, the companies that are in the space of mining for copper, mining for silver, mining for gold, there's probably still some legs to run in all of those things. It is, I think in 2026 you're going to have some stock picker success if you're trading the right kind of sectors. It does come with a lot of risk. It comes with, you might have of 10, copper, silver, gold miners. Maybe one is a real winner and the other ones are flat. That's going to be the hard part, is like picking the right one. So if you play the sectors, I think you can be okay without having to worry about the concentration risk or getting it right. That makes sense. So that's what I'm looking for. I did post some trades yesterday in Project Options Edge. We had a couple of new ones. Project Options Edge, a new trade on EEM for emerging markets, new trade on SLV, new trade on Generac from last week. So 2 new trades yesterday, EEM and SLV. Let's see here. Let's take a look at gold and silver. So silver's wick yesterday, this is gold, but silver's wick was like a 10% sell-off from the high. This does look like a bit of a shooting star on a daily time frame, but I don't put a lot of emphasis on one candle on a daily chart. If this was a weekly candle or a monthly candle, I feel like it would have a little bit more significance. But still, at some point, if we're getting this correction towards the 200-day moving average, could we just, this is it, like one dip, buy the rip? Or is it overbought, oversold? It's finally time to put in a bit of a top. We're going to struggle up here, consolidate, and maybe start to roll over. Am I short gold? No. Am I short silver? No. Probably the dumbest trade in 2026 would be to short those. Could it work out for a single day? Yeah, maybe. Like, you get lucky if you time that out of getting your butt kicked for weeks on end, or timing this out of months of gains. Like, don't call the top. But if you're waiting for a buying opportunity, the trade I took on silver, silver is responding right back up today. But if you look at this from the smaller time frame, here's a 1-hour chart. I mean, structurally speaking, watch this, because if we go from high to low, and this is high, low, little consolidation, well, if there's any follow through, there you go. Follow through from highs at 117, maybe down to 90. What's that pullback? Maybe 20%. It's 20% correction. Cool. Like, that's nothing. This thing's up 150%. So do I want to call the top? No, but wait for some pullbacks. I think we get them. So the trade that I took yesterday for Project Options Edge is on SLV. And, if I'm going to get assigned, I would own silver at like $43. So the chance of it coming back down there is pretty slim, but obviously that's a great starting point. If I'm going to reload on silver, how about we reload where the previous all-time high was and actually have it be cheaper than that? So even if we came back to the 21-day moving average, even if we came back to the 50-day moving average, dollar cost average versus chase this crazy thing to the upside. Can I take the ratio spread 1 and 2? You can, Peter. Just double check is it worth the credit? The reason I took the 2 is because I don't mind having the shares, and also is because I was getting credits of what was our payout there. So one trade I got filled for $1.60. The other trade I got filled for $1.65. So there's $320 of income there. I don't anticipate that I'll get assigned on either one of them. I don't. I mean, EM, for example, it's like shows 86% chance of profit, but we'd have a 30% cushion. We have to have something go really wrong in the emerging market space. Um, this idea of money staying in other places versus the US. I mean, this is like the time for the non-US to shine. We saw it happen last year where, if you look at uh, China index or China ETFs, you look at Brazil, Latin America, you look at India, you look at the UK, you look at Europe. A lot of those ETFs or ADRs outperform the US. I mean, everyone was excited. The S&P is up, 16%, 17%. Sure. But you had other countries that were up 30%, 40%. So, I mean, um, if we have a continuation of that, I mean, it doesn't take much for countries that have been outperformed by a decade, and all of a sudden it's like, well, they look a little bit better on paper and fundamentally. So maybe not fundamentally. Fundamentally is probably the wrong word because I think U.S. is super liquid and resilient and has, I don't know, majority of those top 25 companies in the world. But the valuations that we do have, we're going to continue to we must see super super strong earnings and continued optimism in the U.S. if we're going to continue to sustain these prices. So, which can happen. I mean, there's talks of this is the perfect Goldilocks window for the U.S. to continue to shine, which maybe it is. So, I'm not fighting this market. I mean, I keep saying this. It's like I'm playing a little cautious right now, given this pretty clean rising wedge. And let's say we come back and poke the highs and we roll over, that's fine. This to me is a buying opportunity. If we roll over, let it get out of the way, whatever the heck this is. It comes back down to this level, comes back to this level, let it roll over, wait for trend line breaks, and then we're good. We get back to the highs. If we go higher, excellent. There's your correction. There's your chance to buy in, and hopefully we're off to the races for some good gains for the year. When you do issue your trades on Project Options Edge on this program or later. It's discretionary, Rob. So it's going to be through Telegram. So I send it out through member Telegram for Project Options Edge. Yeah, value, yes, but just be careful on that because if you look at just price to earnings and say, well, that's value, it's like that doesn't mean anything because they've never had price to earnings at 25 or 30, and they don't have the liquidity that the U.S. has. So I'm careful to say like it's better value. It's just like if they just do something somewhat right, they can probably outperform. The U.S. has to do something somewhat right, and they'll just stay the same. The U.S. has to be pretty good, like across the board. So Mag 7 has to be great and everything else has to be good, if not great, mostly good. So we really can't afford to have like forward guidance be negative. We can't really afford to have Mag 7 say like, look, we realize we're spending too much money on capex. We want to start trimming things down. We don't know if there's AI. I mean, if they go negative on the AI narrative, we're going to see a major earnings compression. Okay, if you remember that chart that I showed, I don't know if I still have the screenshot up here. It was a while ago. Let me see if I can find. Um, yep, this one. You remember me showing the screenshot a couple weeks ago? Okay, this is price to earnings where we are for the U.S. markets. Right now, we're trading at like 25, 26 times earnings in the S&P. If there's an earnings compression, low 20s, we're retesting 6150. If there's an earnings compression, sub 20, we could be very close to retesting April lows. So nobody wants to see that, right? Nobody wants to see like the narrative all of a sudden shifts to like, well, we're a little hesitant on US profitability. I mean, there's a trend line. Lows, lows, lows. I mean, this market could have some crazy swings in the future. Right now, the best thing for it is just to keep pumping this narrative. Everything's great. Everything's awesome. Inflation is down. AI to the moon, right? And maybe that is the look. And it's going to feel really uneasy. It's going to feel really cautious if it's like, well, we're just going higher, 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 higher. Maybe it's slow and steady. Perfect setup for engineered options. Okay. Perfect for daily profit play. Perfect for waterfall income. It's like, we'll grind it. If there's a bit of indecision up near the top, it's like I just want to be prepared for that, right? I mean, the market had some indecision here, so I just want to be ready. Make sure I'm not just assuming that the market's going to blow through 7,000 and run all year. Um, that would be an impeccable feat. It's like to have 2023 all bullish, 2024 for the most part a couple of hiccups, but all bullish. I mean, the biggest pullback we had in 2024 was a 10% dip during July and August. 2025 Liberation Day, you survive it. There's your 20% peak to trough, and it was nonstop up since the bottom in April. So, do we do another 2026, 4 years of a bull market? Well, the average bull market can last 4 to 5 years. So, is it possible? Yeah. Is it probable? Eh. Some say no, because the forward guidance of 25 times earnings typically is lackluster returns. Over the next 5 or 10 years, a lot of history says it's going to be 0% returns. So there will be ups to that and there will be downs to that. And guess what that means? There's zero. So there's still room to run. And if we're in this kind of Goldilocks phase, I just want to see how much momentum is behind the 7,000 handle. If we break above 7,000 and we don't show really any signs of stopping, then we are off to the races to kind of clear these highs, momentum and optimism and risk appetite. All these things just keep drifting higher. And maybe earnings do get better. So we'll find out. That's what I'm looking for. All right. So Rob, you good on that? What up, Steve? Hey, somebody watched a little One Trade Mastery. So Peter, to your question, yes, you can just make sure the credits are worth it for you. If you're taking that trade for 50 cents or 60 cents or 70 cents, I think it's a little light on the credit from the trade that I want. But again, those are things that I wouldn't mind owning. Like EEM, I've been talking about adding some non-US exposure. I think EEM, right now, I think from the bottom in April, it's up like 75%. Year to date, it's already up like 7 or 8%. I think there is money going to like those kind of undervalued, if you will, areas. And also in emerging markets, they tend to get a lot of love from the commodity space. And we're seeing a lot of commodity love right now, i.e. gold and silver, copper. And by the way, it's like, copper ran to all-time highs. Fantastic. Does that mean that I want to buy this high? Not really. I could see a short-term top happening. I could see pullbacks into this moving average. If there's a trend here, like let's see if copper actually gives us a trend or a channel of some sort. I'd rather trade that than just assume it's going to break out and be some like giant bull flag. I think that traders, right? It's one thing to like speculate and jump in and chase, but traders are going to be waiting for dips and pullbacks. Okay. And it doesn't feel like you're getting any. Has copper pulled back since this Liberation Day drama? That was a 20% drop in a week. No, it near the bottom literally like that same week, and it hasn't stopped going up. So it's paused here at all-time highs. If we have a pullback in copper, I say as a trader, I kind of like this like 5.2, 5.2 to $5 copper on copper futures at least. If you like the play of copper, FCX is a pretty good stock for that. Gosh, man, I should have just bought the damn shares. I stacked up some option positions on FCX. I think they're still running. Let me log back in on my broker platform. The plan is yes, John. So the bonus trades that I've got, those broken wing butterflies, they expire on Friday. I want to see what happens this week. So remember, that's why I put on a defense trade just in case we're up towards 7,000. So I've got 2 broken wing butterflies that are 165, 195. So that'd be a 335 and 305 risk. But my butterfly trap on Friday, that's up to the 7,000 handle, potentially pays $1,400. So if I need that, then I will, get myself out of some trouble. If we don't need that, and this is just a big rising wedge fake out, then our broken wings will be fine. We also might end up in a profit trap by Friday, which helps us too, because that's $1,000, maybe to add to it. I have CPER. It's pretty good too. Yeah, it's fine. I'd still watch the spot price of copper to see what's happening. But FCX, when we were trading here on the 30s, I think I stacked up like, 35, 33, and 30, or 35, 32, 50, and 30. Let me double check and see if those are still running or they're in profit. Okay. So FCX, these are out to the summer. So I pulled in naked puts 37, 35, 33, and 30 for $500. It's 509, 510, 514. These are all naked put combos. So that'll be a good chunk. Right now, I'm up about, let's see, $4,700 with 142 days left to go. These have a 90 plus percent chance of profit. I mean, do you think that if you look at the chart of FCX, we're coming back to $35? Probably not. I mean, obviously we can, but I think this is kind of a new, kind of new commodity boom right now, at least in the near term, and FCX is a good beneficiary of that. So that's why I played it, and it was in here just using support. If I took any shares, I'd own it around $25, which is oftentimes when I'm doing, project options edge or ratio spreads or naked puts. I mean, I'm going to take trades where it's like, if I wanted to own this stock, where would I like to own it? So a lot of times I don't participate in this stuff. If I own the shares, then sure, I'm participating. I'm using trailing stops. But if I am establishing positions, I'm in a spot like this looking left and saying, how can I create a trade that allows me to own at this level? And if I don't get assigned, it's just income. And that was the naked put combo that I did. Okay. Bill, for what? Daily profit didn't fill yesterday. I was conservative on like the 7,068.50. We had some wide gamma yesterday. Today's a little bit tighter. So we closed. I mean, this is, it's just really interesting that the positive negative gamma is higher, and we're looking at a small gap up like 0.18%. But here, take a look. What's our most obvious gamma today? 69.80, 69.85, 7,000. What's our pre-market measurement for SPX today? Pre-market SPX 25.99. So Tuesday. Today's the 27th. 25.99. Okay. So that's a lot different than yesterday. Yesterday we had a pre-market 38 and ended up going up 41 points and dropping back within that 38-point range. Today we got 26. So it's a small and tight expected range. This is kind of the calm before the storm, with FOMC and earnings really hitting the headlines tomorrow. FOMC is at 2 p.m. So, do we have some open space? Sure. But if we are going to stay in positive gamma above 69.55, that drift gets us up to 69.80. Okay. If we have a, test of this inefficiency yesterday, then we pull back to probably around 69.20 or so. So maybe a gap fill or maybe a drift up into that larger handle. This would be all-time highs. 69.80 seems gettable today. But that's if we have some direction. We're still looking, I mean, if we opened up around 50 and change, that plus minus gets us right there. So we'll keep an eye on that for today. Yep, I agree. So I mean, honestly, if I play the day, it's probably not going to be around that 26 point move. I'm going to play like a 45 or 50 point move and see if I can get enough volatility and direction to actually fill me, and then have the probabilities higher on my side. So yes, futures up about 0.18%. Which one thing that's interesting is futures up 0.18, S&P CFD up 0.25. So it's been running a little bit, pre-market. Does that give us an open just above that positive gamma? It's very possible. If we're up 0.18%, that gets us up to around 69.62. If we're above 55, if we stay above 55, then that is, hopefully heading a little bit higher. So I just want to, get a reading for where we're at. I mean, if I'm going to sell, I like to sell the 7,000 area. That's well above. I mean, if we open up at 60-ish, that's a 38-point move on a plus or minus 28 or 26. So hopefully that's, enough to stay out of the way. Put sidewise, I'm going to be somewhat conservative, but maybe this like gap fill at 69.15. Again, I put those levels out there where I'm trying to look at it technically safe. I might not get enough premium. So if you want to do something indecisive today, meaning you want to take advantage of the market's indecision if it's very quiet. An iron fly could work out very nicely, where you just sell, at the money and you buy your wings and try to grab like a 10, 15% target. But I want to assess price. Earnings on Tesla, that'd be tomorrow after market. So we can take a look at it. Okay. So based on the open, measured 26 points above and below. VIX right now is trading around 16.13. So we'd have a max of just over 1%. 16.13 is probably like a 101. Yeah, 1.008. So round that to 1.01%. And recenter this is 69.50. So if we gap open, I'll take that gap plus the 1.01%. That is going to put us approximately, gosh, it's way up there. I mean, that would push us into like 70-30. That'd be a 16.13. I mean, are we getting there today? Probably not. That's quite a stretch to the 7,000 handle. And then to the downside, if the VIX picks up, you got to be mindful of that. Don't necessarily call the bottom, but as long as price is calling out lows like below 68.30, I'd feel pretty confident. So we take the close yesterday, go 1.01, 68.80. Okay. So those are my measure moves based on a VIX of 16.13. If VIX goes up to 17, 17.5, then the one thing you want to adjust is going to be your bottom. Okay. But we're gapping a little bit higher. Look, it is the day before FOMC. I would imagine that the markets are going to be somewhat chill today. But premiums are going to be pretty bad when the plus or minus is 19 points. That is not cool. I don't love it when the plus minus is so small that you're essentially going to be, 25, 30 points out of the money just to get a decent premium. I'm going to try to pick my battles here and figure out, gosh, I mean, those deltas are so small. Like 69.95 is a 9 delta. I'm going to go. Let's see if I'm going to stack up a couple of these trades and see if they'll fill me. So 90.95, 66. I mean, that'd be plus minus 30. Let's see here. I call the top at 30. That sucks so much. It's a 1 delta. All right. I'm gonna put like the wide trades way out there. 70, 30 by 70, 40. And all the way down to 68, 30. Okay. If this gets filled for $1 today, I'm taking it. It's way out of the way, but I'll take that trade for $1 if we have some volatility. Now I'll go more mechanical around current prices. Let's see if we can get a 10 delta to fill. This is a 9 delta on the call side. That's trading for 50 cents. I'm going to ask for $1. Again, I put them where I want it. I put the premium that I want. It might not fill if we don't have a lot of volatility. Okay. So got 2 pending orders. Right now, based on current volatility and the current expected move, it's a low probability that either one of these fill. But I'm just it's way too tight of an expected move. If we have any drift above or below, I don't want to get stuck in like, well, I went 25 wide and all of a sudden I'm in trouble. So I'm going to try to avoid that. Rob, the engineering option trade still good? Yep, they're still pending. Look, man, this week is not over. I have never seen a week with an FOMC news event that is a straight up move one way or the other. I've never seen an FOMC week that is, on a Monday morning straight up for the entire week, or a Monday morning straight down for the entire week, FOMC is always good for noise. Okay. So there will be volatility. And I think that volatility, again, what we're positioning on for engineered options is a break even week. So I'd say look, if we don't get filled this week in engineered options, it's okay because we still have 2 trades running for winners by Friday. And I'd gladly take those 2 winners at 100% return. Right. And then we can have a discussion next week where, maybe this break above 7,000, if we get it, maybe it is off to the races. And this market's, it's loving the momentum, and we've got some renewed, optimism, and it's time to participate. Right. I mean, the alignments are good, but I was just a little cautious on the break-even level just because of FOMC this week. But they're still good. Yep, they're still good. Good till canceled. I'll let them run. Okay, I'm throwing it in for daily profit members. Hang on. So pending orders. Today's the 27th. And then the 70-30. Okay, they're in Telegram for members. Okay, so we'll let that marinate for a second. Let me go into some real-time gamma. Where is my... Okay, here's our real time right here. So a couple of sticky levels, 69.55 and 69.80. Gettable levels for the day. 80 seems reasonable. I mean, if I were to kind of plan the trade out for the day, it'd be lovely to see price come back and test the positive negative gamma pivot point and then work its way up towards 80. Double ups. I'd like maybe a butterfly there at 69.80 if possible. See if we hold this level. So a gap fill would be around 50. Positive negative gamma at 55. See what this looks like for the rest of the day. All right, just going to keep an eye on the pending orders for right now. I mean, 3 levels. I mean, near the end of the day, it's like, let's say we had a very flat day today. Okay. That's where we opened. That's a sticky gamma level, and that would be a gap fill. So that'd be 68.50 to 55. I'm talking about if you want to trade some butterflies and pin prices, 68.50, 55. That's a good spot. So you consider like a 50 or 55 strike going 10, 15 wide. The fill here, this opened up around 65, 68, 65. If the market's going to finish flat for the day, then we'd kind of marinate around 65 all day, and then 69.80 if we get up into these higher gamma levels. So I don't know, just some thoughts on some profit trap stuff today. This is right before FOMC. I would imagine that the markets are relatively chill today. That might be an interesting way to play it. So if we were at 65, how wide could we go as far as reward to risk? If I went 65, how wide do I have to go? I can go 25 on the call side, 45 on the put side. So I get $13 and change. That's putting my break even around 78, and then a break even around 52. That's I would get $15. I'm like risking. I don't know. I'd rather put in like the tighter flies and make it worth like maybe dollar and change. Let me see what I can figure out today. So would they hang out around like 50 to 55? Let's see what that looks like. So 50. So it's $1.40 to make potentially $10. You spend $1.50, make $8.50 if you're around 68, 69.55. Went a little bit wider. It's going to cost more money. So maybe 10 wide here. That's an option. It's pretty low risk. If I went to 50, so $1.30. Trying to think here. So one at 50, one at 55, and then maybe one up here at 75 to 80. Because I have a feeling I'm not going to get filled today with these trades. If we have a really calm day, I'm probably not going to get filled on my daily profit play. So the alternative is I'm going to throw some risk at it. Maybe for less than $350 to $400 risk, I could have anywhere with a profit trap that pays me up to like $1,000. Doug, yeah, but do you realize that the likelihood of that trade being profitable is like 97%? And also you have $1,000 profit trap if the market's 10% lower. I mean, know what the trade is. The trade is we're giving ourselves 10% room for error. So I mean, 50 cents is 50 cents. I'm not excited about 50 cents. I'm excited about 50 cents with a high probability. And the other trade what I posted, which was the dollar, it's like I want the trade for $1. If I get it for $1, then it takes 4 wins. But more excited is, are we really going to stay below 10%? If we go to 10% down in a drawdown, we're not in trouble. Like the market hits 10, 15, 20%, reflexively rallies off of that, we get paid. It's just playing for margin of error. Okay. So this one are we bouncing back up? All right. So 50, 55, not a bad spot there. Let me see. If I went wider here, gosh, that's a big difference, isn't it? 10 wide versus 15 wide for $1.10 versus 255. All right. So I'll tighten this up. What's this trade for 55? $1.25. $1.20. 40, 50. So if I get it hanging out around 50 to 55, that's 2 and change risk. I'm just thinking whether I do 3 trades or 2 trades. Because the other trade I want to have up around like the 69.80 handle. Let me try. I'll try this one. Let's see if we can get 215. So if these get filled, this will be a trade for double up. Come on, man. I'm right. I'm up above the mid price. 230 should fill. Come on. All right, 235 final offer. Don't be a turd. All right, I'm going to set this order at 225. And then if we do find the 280, or I'm sorry, the 6980 to 6990 zone, I'm going to split the difference and go 85. So if I go 85, that would be 65 and oh 05. That's 20. That's 15. Let's go 15 wide. Good Lord. That's 15 wide for 350. Crikey. That's a bit pricier than I want. Wow. All right, let's see. If I go 85, it's 580 risk. Oh, fudge, man. That's just too expensive. All right. I'll let one of them hang out. I mean, what if we pin at 90, I guess? Is it cheaper? So 90, 75 to oh 05. It's not that much cheaper. And I have a dead zone between 65 and 75. That'd be my worst case scenarios. If I get filled, I'm taking both losses, which would suck. So I'd like to overlap them a little bit, but it just gets way more expensive on the if price is going higher. That all right? It's got filled on SPX for 225. That's a trap at 50. This is coming out for double ups. Give me a second. So that is buy 6965. So that's 13. I'm sorry, 1275 max profit potential. Okay, so that trades in. I'm trying to figure out how I can position for any type of upside drift. That's 20 wide. I mean, can we get to 6980 today? We opened at 65. We had plus minus 26. Let's see here. 26 at 69.65. So that's a 91. This trade isn't terrible. If we drift a little bit higher, I mean, it's obviously taking on some risk. And get in here for like 290. All right. So I've got this thing surrounded with a couple of profit traps. There is a weak spot in the middle that I might end up stacking like a 5 wide in here just in case. Let's go here. Let me add to this. That would be 1710 max profit potential. Okay. So the way this setup looks is, yeah, Aurora, it's been posted in Daily Profit Play. So I have a trap right here. So this is risk, this is peak, and this is risk. Okay. This is risk. This is profit trap. This is risk. And so there's a little bit of weakness right in here. That's my only kind of vulnerability. Well, I suppose we went too far down, there's risk there, but I'm not going to stack up, tons of trades. I would say if I'm right where the downside is, not lower than 69.35 and the upside's not higher than 70.20, I mean, I'm giving myself essentially a 90-point wiggle room. I have 90 points to get something right, which I'd say on a plus minus 26 on the day, I should be inside that window. So I think to be safe, I probably need to play like this, like 70 zone. So if I go 70, that's a little bit tighter. What would be like a broken wing here? So buy, sell. Let's see what this looks like. So it's $1-ish to risk 3 or 4. Plus it has a profit trap. It's probably tighter to do this. Cost me, 40 to 50 cents if we are in that kind of weak spot. If I went wider, $2 total risk, then I'd be covered. I don't know, Vivek. FOMC is always difficult. You're going to see FOMC probably do nothing all morning and until two in the afternoon. That's when all the volatility happens. It's just a risky day. I mean, it's still mechanically, it's like I don't want anyone to get like scared out of the trade for FOMC, but you're not going to get the typical daily profit play that pays us within the first couple of hours. So it's not the usual routine, which is you take the trade in the morning, everything cooperates, and you're done. Okay. We have seen 3 or 4 times how we take a trade in the morning in FOMC and it just sits and it's sticky and price has literally gone nowhere for 4 hours of trading, and we don't get paid anything until FOMC actually happens. And there's just a lot of unknown with what type of direction of volatility FOMC can bring, right? So anyway, all right, I'm going to do kind of one more leg here to kind of cover my butt, see if price will stay above 69.30 all the way up to 70.20. And this could make, the day a little bit exciting. $1.90. Okay. So let's see what happens. So I have the day in double up with this area. So I have one trap here. Oops, I'm not drawing that very well. I have one trap here. Risk, profit trap, risk. I have one trap here. And then a larger trap here. Okay. Now these traps are at the end of the day. So price is so ideally price would be close to 69.50, close to 69.75, close to 7,000. Okay. So this trade potentially has that's 15 wide, so about $1,200 potential. This trade has cost me $2, so $800 potential. And this trade is 290 at 20 wide, so about $1,700. So that's profit potential. Now, risk wise, I'm risking 225, 290, and $2. So, I mean, total risk on the day is, we'll just round up. So 725 is total risk. 725 total risk. Potential profit is if I get one of these profit traps to be decent, even if it's like the last one I put in, that covers, all the trades. So I wouldn't take any risk here and I'd still make $700-800. It's like, well, I'm risking $2 here and $2 here. So I could still make $300-400 on this like 10 wide profit trap. If I get this one, then I'm risking, $2 and $290, and I can make up. I mean, that'd be $700-800 of profit. So anyway, is there still a flaw to this plan? Sure. If price is down below 69.30, I'm taking on risk. If price is above 70.20, I'm taking on risk. If we stay within this 90-point area, I've got it pretty well covered. So later in the day, I'll make a decision to try to get net profits. So I'll look at these 3 trades to manage the net profits. Okay. And there's no overlap on these trades. This is why I selected puts on the upside. It still works the same way as a butterfly trap, but that way I can still work with my daily profit play in case that gets filled to the upside. Okay. Yep. So it's correct. I'm putting in. So I've got 69, 65. These are calls. These are calls. All of these are puts. So even though price is at this level or looking to go higher, I'm still using a put trap. That way I don't overlap with my strikes on daily profit play, which haven't been filled yet, but they're still pending. Okay. That was 56965. 68. I'm sorry, 6950 by 6955 area, or 6975, or 6990 to 7,000. Okay, so double ups, it's all been posted. Sean says out of Microsoft made about 30%. Did you take both trades, Sean? Did you take both trades on Microsoft? Right now, I'm still break even on both. So, I mean, one's up 90, one's down 90, 93.90, and there's still earnings tomorrow after market. So if we get in the plus minus is like 30 points. So if we get a move, I mean, this would capture, if we get to the upside, that captures it. If we get to the downside, this pushes me back down to like 440 or so. We'd have to have a little bit of an overshoot to the downside, which I could see Microsoft getting followed through by Thursday, Friday. If we have a miss on earnings or something, I could see that getting crushed pretty hard. But if it's positive earnings, I could see us back into the 495, 500 handle. That'd be great because that's offering like a 8-1 or 10-1. So we'll see what happens. Okay, market is just jumping up. Show the differential in the debit. Sure. So you're saying those aren't filling? Well, first let me get them organized. So these are the trades I just took. So I've got the 69.65 put, 69.65 put by 69.75 put by 85 put. So that's a fly 10 wide. Then I have the 69.80 by 7,000 by 70.20. Fly 20 wide. And then fly 15 wide. There. So these are the trades. Right now, the 69.50 pin price is down. The 10 wide is break even, and the 20 wide's up 215 bucks. That was quick, huh? So what, I mean, right now it's like I'm actually up 100 bucks already, which is kind of crazy. I'm up 100. Well, now I'm up 175. But if I took the loss here for 90, take the break even here, and take the win for 195 bucks, it's like I carve out 80, 90, 100 bucks on the day. I can just take the profit. And I've been in these trades for, I mean, this is insane, but I've been in the trades for like 7 minutes. It's in there. So the 20 wide right now, that was the two, it was 290 debit, and right now it's showing for four and change. It's a little out of reach right now, but like I wouldn't chase this thing and spend 470, 450 on it, but it is also going to be really sensitive. If price falls back to 69.65, this trade will get cheaper. Okay. So I'm going to let these hang out just a little bit. So I'm down about 100 total on two of them, and I'm up 200 on the other. I mean, that's not a bad like win for the day. But I'm gonna, I don't know, I'm gonna hang on to these trades. I'm gonna see if I can get a big fat winner late in the day. So my total risk is 225, $2 and 290. So what's that total risk? Like under, it's like 700 bucks. 290, 225 and $2. I'm risking 715 for the entire day. Now that's not including daily prop play if those get filled, but that's my total risk. Now that also gives me a profit potential of $800, 1,200 plus dollars, and $1,700. If one of those gets me into like a decent winner, if I get one trade that offers me over $500 profit, it covers the risk of the other two trades. So it's I won't know that till later in the day, but that's really what I'm going to do as far as playing this trade. Yeah, and so Steve, it's okay. I mean, if you put the 290 in, put it at 290. Put it at 290. It could still get filled. Okay. If price comes back down, this trade's probably trading for 290, 275. Okay. So you're not out of the trade. Just like I'm saying, don't chase it. Don't chase it at 470 like that. Don't take that trade. If it comes back, it's like this is zero DT, man. It's really price sensitive. So if price falls flat again for the day, that could still get filled. Okay. So as I'm monitoring this morning, if I have a net, let's say 250 to $300, and I'm staring at that this morning by like 11 o'clock, then I might just take the profit. Um, Obviously, I didn't expect to be up, 100 bucks in 7 minutes, and I don't think it's fair to take the profit right away because I'm just in the trade. Steve's telling me you can't get in for the trades that I got filled at, so I'm not going to close them out. That seems a little unfair. So I'm going to let these marinate, and I'm going to see if I can get one of them to pay me more near the end of the day. Like once we roll after like noon or 1 o'clock or 2 o'clock, ideally this gets a lot more profitable at the 3 o'clock handle. So 3 p.m., 3:30, like that's when all the magic starts to happen in these traps. Yeah. So don't take the trade for 445, Stephanie. If you want to put it in there, put it pending at 290 and see if price fills. Okay, good. Yep, sounds good. Okay. Which trade is the 95 cents? There is not a trade for 95 cents. I've got a trade for $2, 290, and 225. The other trades I have pending for daily prop play, it's $1 and $1. Those are still pending. And Dave, it's not a broken wing butterfly. They're all butterfly spreads. So this is a butterfly spread, not a broken wing. Butterfly, butterfly for today's trades. Yeah, 295 was the 290 was my fill. That was a 20 wide butterfly. So I went 69.80 by 7,000 by 70.20. So 7,000 is my pin price right here. So it's equidistant 20 wide from the 7,000 pin price. That way, if we get to 69.90, right? If we get to 69.80, 85, we get to 69.90, that should be offering a decent amount of profit that I could hopefully cover the risk of the other two trades. So, I mean, for that trade to be full profit by the end of the day, if we're greater than 69.82, it's profit. If we're less than 70.18, it's profit. And that pin price and that perfect $2,000 trap is at 7,000. Did we get there today? I don't know. Probably not. Based on what market makers are telling us, no. Right? Based on a plus 26, I mean, we opened at 66, go up 26 points. You're looking at a 92 high today. I mean, 92 is still going to get me paid, but the question is, am I getting paid enough to cover the risk of the other two trades? And that's a possibility. So that's kind of why I'm throwing the trades out there. All right. So 110, break even, up 170. So am I up some profit right now? Sure. Up like 70, 80 bucks. But I'm not going to take that profit. Like, I want this to be a pretty decent win. I'd say, maybe $200 to $300 minimum, with upwards of, $500 plus. I'd be pretty happy. Okay. Venkat, it should be in your double up classroom alerts. There's no Telegram for that. Engineered options, we had trades from yesterday. So those are still pending orders from yesterday. Double up will be in your Telegram, double up will be in your classroom alerts. Go to One Click Trading and log into double ups and check your alerts folder. Nothing. Fish is asking about that broken wing butterfly. Nothing. I'm still holding that trade. Okay. So the broken wing, this is a build a trade broken wing, 69, 30, 40, and 55. Then I have the defense that I put on here as well. So if you're in, let me type this out. If you're in any of these bonus trades, it is either the 69.30 by 69.40 by 69.55. That's a broken wing butterfly for $1.65 credit. Or you're in the 69.45, 69.55, 69.70 broken wing butterfly for $1.95 credit. I'm still in these trades. No management. And I added a defense trade. We did this yesterday. And that is a buy at 6985. That's a call. So it's still SPX. It's 130 expiration for SPX. 7,000 is the pin price. And 7015. And that was a debit of 95 cents, I believe. Yep, 95 cents. So it could be what? 1405 max profit. So max risk of 95 cents, max profit potential at 1,400 bucks. So I'm in all these trades still. I'm not managing the trade because of FOMC. If we end up going back down below 69.30, that wins. We go back down below 69.45, that wins. We go up to 7,000, this wins. So my goal is I'm trying to manage hopefully something that's net profitable by the end of the week. Between the bonus trades and a defense trade, hopefully one of them gives me net profit. Didn't take Phil the defense one. Right now it's probably trading for, I'm showing like 30 bucks. So it's probably trading for like $1.20 or so right now. Let me check. Defense would be here. Right now it's trading for about $1.10, $1.20. So you're sacrificing a little bit of the max profit, but it's still, I mean, if it fills for $1.10, $1.20, you're still making like, what, 1380 profit potential. That's not a that's not a big increase in my opinion. I would still be okay with that potential profit trap. Yeah. So the package was initially I just wanted two trades. I didn't want to put on a defense trade, but as I see that we're, I mean, I'm getting positive gamma, we're getting all these gamma readings and flows. Like here's today's 0DT. So we're trading at 69.71 with flows up to like 69.80-ish. That's my biggest gamma level today. So if we go higher than that, 69.80 to maybe 7,000. Okay, well, that would help us today. We go to the expiration on the 30th. 7,000 is by far the biggest and stickiest level. Okay, back down to 69.50, which honestly, if price is close to this level, that's a $1,400 profit trap. If price is close to this level, that is a $1,000 profit trap plus the $1.95. Right? If price is below that, then we have winners on the broken wings. So where's my max risk to the upside? So if price blows through like 70.50, then I'm down 335 and I'm down 305 and I'm down 95 cents. So I'm still taking on some heat. And what's the lesson? Well, I guess Chris tried to call the top and he lost. So I based it on a rising wedge. We had good structure break. We came back to retest. I sold that expecting us to fall a little bit lower. And right now we are still drifting to the backside of that wedge. So I don't know. I mean, if we go too high, then I'm going to lose. But if we stay below, 70-10, 70-15, I've got profit trap potential with a 7,000 pin. And that's my defense trade. If we're back below 69.50, I'm not sweating this trade at all. I sacrifice the upside and I get two broken wings to pay me with a profit trap. Hopefully. And guess what? We're all going to find out on Friday what happens. So it is defined risk. I know that I'm wrong if price goes too high. I know that I'm getting paid, what I want to get paid. I'd be risking, so I'd have what, 165. So I'd be up 360 minus 95. I make 265 on the broken wing butterflies, and that's with no profit trap. If I get a profit trap, there's another $1,000+ of potential profit trap to add to this, which would be great. If we're hanging out at 69.50, that's a $500 profit trap on one of the trades. If we're hanging out at 69.40, that's a $1,000 profit trap on one of the trades. But I don't know where it's going to close on Friday. So we'll find out. All right. The 69, 45, 50, 65. Well, I don't know if that's going to be the right credit there, Dave. I mean, if it does, then you're only risking like 90 cents in that trade. And that's not my trade, by the way. I did a 45 by 55 by 70. So if you're going to Friday and you're saying 45. So 45 by 50. Oh, because you're also going 5 wide and 15 wide. So you're bringing on more risk than I am. Okay. So that's a $500 profit trap with a 15 wide. You're still risking, $360 on that trade. So I went 40. So 30, 40, 55. And then 45, 55, 70. So I'm 10 wide on the trap. 10 wide on the trap, 15 wide on the credit spread to give me that finance credit. Let me get the exact price in this one. So right now, this trade is trading for about 280 to 290, which means you're risking about 210. But remember, the trade is you need price to get back down to 69.50. If price goes higher, you're risking 210 on the trade, and your probability of profits 38%. So it's not a great trade. Like looking at it right now, it's not a good trade. But why do I still want to hang on both the trades? Because if FOMC, pokes the top and fails on Wednesday's high, Thursday, Friday sells off, guess what? My analysis is right. That rising wedge, we break the wedge, we come back and retest, we poke the highs and we fall. If by Thursday, Friday, the market falls, great. If it finishes at the high on Friday and then February it falls, well, I guess I timed it wrong. But I mean, look, I accept the risk. It's like whatever happens, I accept the risk. It's just a trade, but I want to win. So what do I need price to do? I need price to, with FOMC volatility, I need price to fall, right? If I get a defense trade, fine. That's a defense trade. But ideally, it's a lot easier to make money on the broke wing butterfly and, maybe land a profit trap on Friday. Okay. All right. So that's the bonus stuff. Two broken wing butterflies and a defense trade at the 7,000 handle. Daily profit late today has not filled. Double up is running with three traps today. We'll see if we can land one of them. Let's go back to today. I wanted to also spend a little bit. I mentioned this morning in Telegram. If you took a look at my general Telegram here, we're celebrating engineering options win. So congrats. We grabbed a full 100% winner. If prices hanging out right where it is right now, 69.75, 7,000 by Friday, we get two more winners in engineered options for another 100+%. So that'd be three winners at 100% each. That's great. Today's daily profit play, we've done that. We're pending orders. Let's see what happens. Added some new trades for double ups. New project options ed trades. They were in EEM and fudge. What was the other one? EEM and why am I losing my brain? Project options edge. Silver. Oh yeah, duh. Silver. Okay, so EEM and SLV. I wanted to look at Apple, Amazon. We already have some trades running on project options edge for those. I also wanted to share a bit of a bonus strategy that I'm going to track it on my own. I'm going to track it personally. It's not going to be a service or anything like that. I'm just going to give you a free trade that you can look at for the end of the day. So I did this trade yesterday, and it worked out pretty well. And I've done this trade a handful of times, and it doesn't win all the time, but it is a nice trade to get paid out. So at the end of the day, let me see if I can find that net profit. Let's see here. Did I not take a screenshot? Oh, here it is. Here it is. Everybody see that? So low risk end of day. That's what this means. Low risk end of day. So I took one on XSP. I took one on SPX. This was a winner for $363, and my risk was 95 cents. And this was risk for 30 cents, and I was up. We settled at like 69, 695.0 something. So I would have netted about $60 on this trade. So it'd have been up like 175%. So I'll give you the gist of the trade. You're in this daily profit play stuff with me every single day. We do some math. We calculate our tops and bottoms. We know whereabouts price should be almost every single day. Okay. So the frequency of this trade that I'm about to talk about is not very high. Okay. The frequency is not very high, meaning that the only time this trade is really going to work is if price has spent all day grinding higher and it's getting near the tops of what we would expect price to be at. So this could be at the top of the plus minus expected move. If it's near the top of this, okay, or it's up near the top of our VIX box, and we're coming into a 3 p.m. to 4 p.m. window. The reason why I take the trade around that window is it's the final hour. And if price is going to fall into the close, then this is a very cheap way to get like 4-1, 5-1, up to even 9-1 trades. Okay. How many of you are interested in this? Type in a wire me yes if you're interested. Okay. Again, I'm not going to post these trades. This is going to be a service that I run. I don't know the frequency of this. I've just been doing this for the last couple months, kind of eyeballing the 3 to 4 p.m. close, because I noticed that, when I'm calculating this stuff, I've again, call it experience, call it, just kind of mining the tape every single day. There are days that the market will spend, nothing, and then it goes up all afternoon, and then late in the day it closes. And that is what I'm looking for. So if it's after 3 p.m. and we're up near the top of the day, I don't mind taking a trade that's going to give me some 4-1 to 10-1 type setup, because we obviously don't have to win a lot of those trades. If I win, 4 out of 10, 5 out of 10, we're going to make a lot of money. Okay. And the most side risk is probably like, 50 to $100. And I can make, 4 to $800, $900. So if we get a couple of those right, we're pretty happy we take the trades. What's the worst thing that can happen? Well, we go to the highs, we stay at the highs, and I'm going to risk $100 and lose. Does that make sense? Okay. So here's what the trade is. Essentially, I'm looking at a 3 o'clock. Oops. I'll type this out in notes. So 3 p.m. to 4 p.m. is my trading window. Okay. And I'll put here, very important, like this is not a trade that fills every day. Okay. When do I look for this trade? So a couple things. We've calculated our plus minus on the day. So we use this for daily profit play. We've calculated our kind of VIX box high on the day, which we do this for daily profit play. And, at the 3 o'clock handle, at or slightly after 3 p.m., I'm looking for a 5 to 10 point in the money bear put spread. Okay. So example, let's look at yesterday. So yesterday, here is the run up. This is 1:30 in the afternoon. Where's 3 o'clock? This is 2:40. This is 3:05. So I'll just highlight this area. So this, the top around 1:30, which doesn't matter. Okay. But this is around 3 o'clock. In fact, I'll just find the exact timestamp. So follow my cursor. This candle right here is 3 o'clock. Okay. This green candle is 3 o'clock. So we have a open around 59, a high around 60. The trade that I took was a 69.55 by 69.50 bear put spread. Okay. So let me highlight this in the chart. So this is the candle. And let's make sure we understand this trade. Like, don't go freaking trade this blindly every single day. So 3 p.m. price at 6960. I set up this trade. So if you want small risk, go XSP. So this would be SPX. Here, we'll go 6960 on SPX. Then XSP was trading around like, oh fudge, I don't remember, 694, 693. I guess I can look at it, huh? We'll just do this example first. All right, so set up the trade. So I bought a 6955 put, and I sell a 6950 put. That was a 95-cent debit. What's my max risk on the trade? Okay, this is pop quiz stuff. What's my max risk on that trade? Yep. 95 cents max risk. What's max profit? 405. Okay. Where does price have to be for max profit? So I'm risking 95 cents to make 405, but where does price have to be for me to get and achieve max profit? Other way, Grothry. Less than. Yep. So if we're less than 6950, because that's the debit spread, right? I buy the 55 and I sell the 50. I'm trying to push this thing lower. So if we're less than 6950, that's full profit. So where did price close yesterday? Price closed at 50.15. 6950.15. So my exact profit is 405. 405 minus 15. I made 390 on the trade yesterday. Okay, so and this is quote stream media. If it was tasty, I think it was a 6950.23 close. So that would be like 380 ish. But you do the math. Okay, so the point is, why'd the trade work? Well, because we had the start of the day at 23. The market was expecting like a 38-point move, right? We saw, what was our calculation yesterday? I think we were expecting like a 38-point move, yes? So 23 to 37.38 puts us up to around 60. And guess what? We got to 60. In fact, we went a little bit higher. We went to 65. So we went up about 40 points yesterday. And I decided if it's 3 o'clock in the afternoon, we've already hit the expected move for the day. Maybe it sells off into the close. I would say that I was fortunate to get the trade correct. So I've done this enough over the last couple months, and I'm like, I think I'm going to talk about this in one of these sessions. I think now's a good time to talk about it. Dave says not 95. Why 95? I'm not doing a credit spread, Dave. I'm doing a debit spread, man. I'm going for a high reward, low risk debit spread. So if I buy the 69.55 put and I sell the 69.50 put, this costs me 95 cents, which means I can make 405 if we're below 69.50. This is not a credit spread. I do not want to take more risk than reward late in the day. Okay. So if that closes 69.50.15, that exact profit would be 390. So I made 390 while I was risking 95 cents. So what's that return? That's a 400% return at the end of the day. Do I have to win a bunch of these trades to be right? No. And the answer to that, Stephanie, is no. I didn't close it at all. I let the broker close it for me. So this thing cash settled at the end of the day. Because if we were to cash settle below 69.50, then I'd make my full profit. If we bounced and came back up, I mean, my break-even price would be 6954.05. So 6954.05 is my break-even price. So when I take this trade, if price is anywhere below 6954.05, I make money on the trade. And since it settled at 69.50 or around that 69.50 handle, it's cash settling for that profit. Can you also do the call side as well? Do you want to do it the same? What good is that trade? You're essentially doing a reverse iron condor at the end of the day. I would say no. I'm not that interested in doing that trade. You're probably going to overpay. You're going to overpay, and and what you need is direction. If you don't get any direction, any movement, look, this trade is not going to be a high probability trade. I will tell you that right now, because end of the day, when this thing drops, 10 points, great. If it drops 10, 15 points, great. There's going to be a lot of days where price does this and it stays right here. Guess what? I just wasted 95 cents. There's going to be days where it goes up. I just wasted 95 cents. But the days that it does do this and I can make 400%, I can sacrifice a couple of these stupid trades where it's a loser. So don't try to over optimize it. Don't try to, I'll buy the calls and I'll buy the put. Or why? Now you're going to pay for a move that you need direction and price might not give it to you. And now you're double dipping on a debit that's not really going to pay you. Just my thoughts. So again, why am I calculating this trade? And look, this works the other way as well. Let's say that we're down for the entire day. We're down the entire day and it's at 3 o'clock in the afternoon. Guess what? If we've already hit the plus minus expected move, if we're near the VIX box low, there's a good chance at the end of the day, that debit spread might pay you at the end of the day. If price can rally, 10, 15, 20 points, all you need is that little 5 wide or 10 wide. You can take a stab at it from the call side, but that'd be the opposite setup. Price would have to be falling all day, hitting those expected moves late in the day, and then you want to see if the market rallies into the close. So as long as that trade was, maybe 5 wide for under $1 or 10 wide for maybe $1.20 to $1.50, that's like the most I want to risk. So if I'm going 10 wide here, the most I'd want to risk is about $1.50 debit. That's it. I don't want to risk any more than that. Ideally, a 10 wide would be, if it's less than $1, oh man, if it's less than $1, I can't freaking type 1. If it's less than $1 debit on a 10 wide, that's a huge winner. Because if that ever gets paid and we get 9 to 1, that's an awesome trade. If we go 5 wide, we definitely want to be less than $1. That way I'm getting about 4-1. Okay. So 4-1 on a 5 wide, potentially 8-1, 9-1 on a 10 wide. That's a great setup if and when it gets paid. So either the market is starting, pushing up for the day, it's hit the expected move, it's late in the day. Okay. If I take that trade for price to fall a little bit, that's a good setup. Okay. What's the worst that can happen? You lose on the trade. So if price is up at the highs and stays at the highs, you lose. If price is at the highs and it goes a little bit higher, you lose. But it's a small trade. If price is down for the day and it's late in the day, you're looking to see, will it rally into the close? And if so, can you do the same thing here? 5 wide, 10 wide, can you get a asymmetrical setup, 5-1, 7, 8, 9-1 potential trade? So, this is going to be kind of one of those like bonus situations where if you're around the computer, late in the day, if you're around the computer watching the closing bell, this could be a fun little trade to throw into your toolkit to see how it works. Is there a trade to be made, 0 DT, that pays if the market stays within the channels high and low? Brian, I feel like you're begging me to tell you about daily profit play because that's literally what we do every day. Daily profit play is your jam if that's what you want. But between channel highs and channel lows, absolutely. That's within the expected move. That's what we do every single day. Can you look at the option chain near the 3 p.m. window, verify what strikes the market maker would identify max pain for call holders? I mean, max pain for call holders, it's like I can tell you where the max pain point is. If we have this and the plus side of the expected move, that's your max pain point. I mean, most of the time, market makers are selling premium at the expected move, and anything above that, they are hedging those flows. So max pain point is going to be primarily if it's exceeded the plus of the day and it's going above that, then the 0 DT has been most likely rolled to the end of the day. It's most likely rolling to the next day, and what's going to happen is they will have, this is market maker stuff, they will have an inefficient day, and then the next day they'll probably go efficient. And correct me if I'm wrong, Daily Profit members, do we not see this happen all the time? One day is an outlier where it's like, yep, prices were here was our opening price. We expected the high and low of the day, and price settled here. So this was inefficient. And the next day, what does it do? It's in between. So usually in a market maker day with 0 DT, if we see one inefficiency day, the next day is most likely going to stay inside those levels. Just higher probability. So your max pain is when it's beyond the thresholds of what was expected on the day. Right? Because look, there's no surprises. Right? There's no surprises when it comes to, 0 DTE and market maker stuff. I mean, yes, things get a little like, let's say 1 out of 10 days, the market's like, yep, it didn't close within the expected move for today. And that can happen. But the reality is, I mean, if that's 1 in 10 times, as long as you're managing risk, it's like, yeah, manage risk on the one day that price doesn't do what it's supposed to do. And then the other 9 times out of 10, it does. So, I mean, that's what Larry said. It hasn't lost a daily profit play since 12/18. I mean, we are 91% since January. This month, I mean, all of our trades for daily profit play, we're at 91%. We're winning a lot of our trades as we expect to. Okay. Nice, Steve. Good. And that's good because we still have the gamma at 69.80, right? So if we get to 80.85, like that's going to look even better. Okay. Ernesto, that's up to you, man. I don't like to do the opening bell flies, the opening bell flies, the iron flies. That's fine. It's fine, but it depends on how much you're willing to pay, how much width you're going to have. I mean, some people that open up like a 20, 30 wide iron fly, that works great. Okay. But you're also taking on, I mean, if I could look at it right now, it's like, what's a 20 wide fly? It's going to be pretty expensive. So if I did current price, I do a 20 wide fly. So let's go 75 to 7,000 and then to 50. So I can pull in 1270 in credit. I'm risking, 1,200 to make 1,200. I'm not super thrilled about that trade. It's like, it's a good level to say, well, we should stay within the expected move. So if we're within the expected move, there's a good chance that I can make profit on that trade. Yes or no? But if we go beyond that, I'm risking $1,200. If we go beyond that, I'm risking $1,200. No thanks. So iron flies are fine depending on what your risk tolerance is. In daily profit play with my iron condor, I can risk a lot less than that. So I tend to not go to the iron fly as my strategy. But it works if you want to go wide and put that on for the day. It's like if price stays within expected move, it's good stuff. But mechanically speaking, you got to manage iron flies early. If you hit 10, 15, 20%, manage it early. If you want the highest win percentage, manage it early. Because you put on the iron fly, you're still exposed to that 10 times gamma risk in the afternoon. What did gamma look like yesterday? So gamma yesterday, I already knew that we had hit the expected move around 69.60. And so when I took the trade yesterday, that afternoon trade, we had gamma at 65 and 60. And as the day started to sell off at the very end, my big gamma level stuck at 50. So it's all happening in real time. The gamma was not an influence on my trade. Okay. What I discerned from the gamma yesterday is we already hit 69.50 and 60, and we already hit the expected move for the day. That is why I took the trade. So I go back to the same foundation. If we are here and we're up on the day and it's hit the expected move, guess what? Late in the day, if it's after 3:00 and the market can sell back off, that's a low risk, high reward setup. All you need is about a 5 to 10 point move to get it paid. So when the trade was sitting at 60, we're trading at 69.60. What's the trade that I took? I bought the 69. Jeez. I bought the 69.55. I bought the 55 and I sold the 69.50. So I went 5 points out of the money and price dropped 10 points. So I mean, to get full profit, I needed 10 points and it dropped $9.15 or $9.85. That worked out in my favor. Okay. In some cases, if I wanted to do, and this is a lower probability, but it pays more. If I did the 69.50 by 69.40, okay, if I did that trade yesterday, I would have paid probably 90 cents for a trade that offers me $1,000. The problem is it didn't close below 50. Had it closed at like 47, I spend 90 cents and I make $3. Great, that's a good win. But I need price to drop 10 plus points. So I'm more of the belief, like, I don't mind doing like 5 points, in the money. So we're trading at 60. I go 55 by 50 or I go 55 by 45. As long as that debit, if I'm going 10 wide, I want to pay no more than $1.50. If I'm going 5 wide, I want to pay no more than $1. That's my setup. Make sense? All right. So, we can come back and revisit this if we want to. I've just been doing this for a couple months. It doesn't win a lot. I probably win about 45% of these trades, but my average winner has been like a 250 to 300% winner. So I can afford to, make some money with that. And also it's like, I don't know. I mean, I'm here closing bell. If I think it's a good opportunity for a 5 to 1 or a 9 to 1 at the end of the day, I'm going to take a stab at it. So, and if it doesn't work, I've just recognized like, okay, didn't work. But when it does pay me 3 to 1, 4 to 1, or 5 to 1, or 9 to 1, you're very happy to take the trade. Okay. So I think it's something that maybe it works if you are watching around closing bell. So 3 p.m. to 4 p.m. Eastern time is a trading window. Okay. And the market's hit the expected move on the upside, or it's hit the expected move on the downside, and you're looking for a late rally with a bull call spread, or you're looking for a fall with a bear put spread. And that's it. So you want to go 10 wide, don't pay more than $1.50. You want to go 5 wide, don't pay more than $1. And look at anywhere between a 4 to 1 on a 5 wide spread, or look at like an 8 or 9 to 1, 8 or 9 to 1 and a 10 wide. So as long as price can give you maybe 5 to 10 points of movement at the end of the day, up or down, obviously you're buying a bull call spread here, you're buying a bear put spread here. I mean, 5 to 10 points is typically all you need to get paid. And the nice part is this thing can cash settle. So there's no crazy assignment risk. It's like just trade it what it is. And if you want to trade it smaller, then you can do this on XSP. Yesterday, I got a trade for 30 cents. Okay, 30 cents on a $2 wide. So I walked away with, I think I walked away with like $1, because it settled slightly above, I walked away with like $1.55 profit. So I paid 30 cents, got about $1.55 profit out of that. Like, again, good return. It's like a 4 to 1. Not bad. Okay, so around 3 p.m., go down 5 wide strike. That's pretty much it. But again, just remember the other kind of check. If you're building a checklist here, you want to make sure that it's at the high end of the day, right? So it's near the top of the plus minus move on the day, or it's even beyond it. If it's even beyond it, that's fine. Because one thing we talk about in daily profit play is, let's say that this is opening bell. This is my expected move for the day. This is my expected move for the day. If price has been spending the day up here, guess what that means? There's a pretty good indication that the market, to stay efficient for the day, it might get back to within that level. And when that happens late in the day, those are one of my favorite trades, because that is a great time to be doing a bear put spread. If price is, 10, 15, 20 points higher than the expected move, and it settles within the expected move, there's that direction you're looking for late in the day. But I'm very selective on the price movement. I just buy the put for about $4, make upwards of $20 to $30. I mean, upwards of, sure, but you're also telling me that you're getting 20 to 30 points of movement at the end of the day. That's pretty rare. I mean, I can see it. I mean, if you're spending $4, you better get 5 to 10 points of movement. But in zero DT, I mean, you get that pure gamma at the end of the day. So, but again, you're risking $400. So that's fine. But it's like, I'm comfortable with throwing $100 at it. If it pays me $400 to $900, I'm happy with that. Yeah, I get it. Okay. Let's see. I bought the 69.55 put for 75 cents at 3:50 p.m. Got it at $1.60. Closed at 4.85. I let it cash settled. Yeah. So look, this isn't a trade that's like I'm just taking a stab at it. Like, this has a plan. If we're beyond the plus side of the move, and this is why it's so important in daily profit play that we plan this stuff. Where's the market supposed to be? In an efficient day, where's the market supposed to be? If it's going to be lower than this level, higher than this level, guess what? If we're above that, there's two things that can happen. It can stay above it, or it can get back into the efficiency range. So if I take a stab at this one late in the day and it gets back into the range, that is a high reward, low risk setup for us. Great. Why do I wait till 3 p.m.? Because it's way cheaper in that final hour than it is to put this trade in at noon. If it's way up here at noon, I don't want to take the trade because it's going to be an expensive debit spread. If it's 3 p.m., there's not enough time in the trade, so it doesn't cost us an arm and a leg. That's why I like it. When the price move's been sideways all day. Yep, I gotcha. Okay. So anyway, we can come back and revisit this. Blake, let's do this. Let's fire up. I'm going to be live for a couple more sessions. So let's spot check how things are going right now. Let's see. Daily profit play, the 95 and 7,000 still has not filled. Let's check on those flies. See how these are doing. The 20 wide's up 250. So I'm up right now about 100 and still about 130, 140 bucks right now. My feelings wouldn't be hurt by taking the profit if I can close it out, at, this is a 290. So if I can close this at $5.50 to $6, I wouldn't mind taking the profit on this thing, especially if it's better than this. My concern is with the sensitivity of the options prices. If I close this one out for $250, I want to make sure that I can in fact close this one for a loss of 120. But if I close this for 250 and this one is a loser for 150, it's not really going to help. I mean, it's still $100, but still, I'm trying to get this one to pay a little bit more if I can. 20 wide has a lot of profit potential. So if this one is showing 300 plus, $400 plus, there's not much this one can do to hurt me, right? They're not filled, Chuck. They're still pending, man.
Yeah, we had a lot of questions about that this morning. Several people were asking if they could still get the trade in.
It's still available.
Yep.
So we have this trade closed for profit. This trade is still in. This trade is still in. These close out on Friday. Hopefully, if we stay above our strikes at 686, then these are full 100% winners. This is a 68.75 on SPX or 686 on XSP. The trades that I posted for this week, these are still pending. Okay, look, man, I am telling you, just because we're sitting here at these highs this week does not mean to just feel like you're not going to get a trade. There is plenty of volatility ahead. I'm telling you, I've never seen a week in FOMC ever that doesn't have volatility. So, we're up here at these highs. Great. I don't know if this is lulling the market into thinking like everything's hunky-dory, but FOMC could throw a big old wrench in it. So take a look at the weekly chart. This is the weekly candle on SPX. Okay. Either we are going to see, and I'll just throw it out there. This is what I think we could have price action wise. Either this is a candle that's going to continue to push up for the entire week and close up here, and I could see a big fat indecision and then a big fat red candle in a couple of weeks. I could see an evening star setting up on this market at these all-time highs. I could also see this week with it's up for the week so far and it finishes flat because of FOMC. I know we have earnings, we have FOMC, we have PPI, we have the end of the month, all these things. So look, if prices are higher, the trades I have pending this week for engineered options wouldn't fill. I didn't chase the 20, 30 points in the money like I needed to. And the market was, I mean, look at the market. The market opened on Monday, and what happened? This was Monday's open. I had to literally chase this thing right away, and I didn't. And therefore, I'm not in the trade. But I am in this level right here, waiting for a pullback. And if we get one, we will be fine. Because what does the market have to do for the week? If it stays break even or better, we can make money. But price is up here right now. So be it. If price goes higher, fine. I won't participate this week. There's always next week. But we'll have 3 winners. If price is up here, we have 3 winners, all at 100% return. That's not a bad thing. And we'll come back and tackle it again next week. There's always another trade. Okay. All right. Thanks, Shannon. I appreciate that. Let's see here.
What else you got?
You have other bear call spreads. Just got phone with Tasty. They told me I was asking for too much of a credit. On what? Your bear puts or bull puts? I mean, you're not asking for anything. Like you're asking for it now. It's like, yeah, you want 50 cents. You're not going to get it now. But, you know, again, this is what we talked about in the masterclass is like, if you want like on XSP, if you want 50 cents, you're going to have to be 2 to 3 points in the money. On SPX, you want to be, you know, $2.50. You're going to have to be 20, 30 points in the money. That's what we talked about in the master classes for that participation trade. Why did I not chase the participation trade this week? Because of FOMC and earnings and the fact we're sitting at the top of a rising wedge. That's all. So maybe my discretion got in the way, and it's fine. But we also have 3 trades. If we get 3 winners, I'm happy with that. We can reset and take another trade next week. Okay, Davis says I'm up 350. Let's find out. 370. All right, so now I'm up about $200 on the day for that 20 wide. That's not bad. Obviously, that doesn't suck. Plus or minus on the day, we're looking at maybe like a 90 to 91. See if I can get this bad boy up to like $400. All right, that 20 wide for $400. Come on. So 490. Let me see if I get 710. So 290. All right, so I get $7 for this thing, maybe 705. All right, I'm gonna try to close it for $400. All right, I'm out for $7, and I just got filled on my daily profit play. Well, that makes things very interesting now. Daily profit play is here. That filled on the 5 wide, and now I'm going to close this one down. So this is down about $150. I'm going to close this down. So 70 cents credit. See if we can get out of this for 70 cents. 65. Oh, shit. That's falling fast, man. Are we going higher? A little bit. Crap. All right, filled for 65 cents in that one. And this one's down $38. So I closed out for 410. And then let's see here. This one was 225, closed it for 65. So that's 160. So minus 160 and minus about $30. So I'm up 220 on the day from the flies. This one's down $30. So $2 close at $1.80, hopefully. $1.75. $1.70. 65. All right. So trades are all done. This is going to be posted in. Now, obviously, I'm out with some profit. I'm up like 250 bucks. I'm curious now how the rest of the day plays out because I'm always interested. If I put on those traps, it's like, what would this have done for the end of the day? Even though I'm out with profit, which I'm happy with, I'm always curious, like as the teaching, like a teaching side for myself is, could I manage this winner a little bit differently? And the answer is maybe, right? I mean, if my 20 wide fly and we see price get to 69.90 and 7,000 today, that 20 wide would be worth 700, 800, 900 bucks, which obviously would be nice to hang on to these trades. But while that one is paying more profit, the other ones are going to start getting worse in risk as well. So long story short, I'm going to put a update here for double ups. Oops. So double up trade management, closing all positions for net profit. The entry pin price at 6950. Entry was 225 debit. Closed for $1.65 credit. Actually, no, I take that back. That was closed for 65 cents. Sorry. Closed for 65 cents credit. Pin price 6975. Entry $2 debit. Closed for $1.65. And then pin price 7,000. Entry was 290 debit. Closed $7 credit. This is the winner. So 410 winner and loss of 35 cents and loss of $1.60. So I'm up 410. 410 minus $1.60 minus 35. I'm up 215 on that trade setup. I'll take it. Okay, alert's going out. Nice. Stephanie says got 880 on the 7,000 pin. Excellent. Just got 10 cents. I just got 10 cents for the 69, 10, 15. Oh, you got $1 for that, right, David? You should be getting $1 on that trade. So daily profit right now is showing some profit. So price needs to stay below 69.95. Hopefully it does. If I'm seeing on this one really quickly, if I'm seeing like 30, 40, 50 bucks, I'll probably take the profit and add to the day's win. Yeah, so I'm in on daily profit play for $1. And that way I'll update this in our daily profit play as well. So DPP update. Today's 5 wide filled. So that's 995. And then the 6915. So looking for, I'd say 70 cents debit or lower to protect. That's going to be the plan for the day. See if that gets, maybe from $1 in, trade it for 70 cents debit. Anything less than that would be good to take profit. Okay. And then, so what I'll do for the remainder too is like, I want to see this trade. Right now, like I close it for 7, it's trading for 695, 690. I want to keep an eye on this stuff for the rest of the day because if we are here at 6982 late in the day, my trade is going to be like break even. So, I mean, realistically, I need price to be at like 6985, 6987, 6990. That's where the big profit is. 7,000 is the perfect trade. 7,000, this thing's worth, $1,700. But we got to stay at 7,000 for the entire day and close there, which that's the hardest part. Okay. Steph says only 615, but very happy. Good. Yeah, good. Okay. So, it's trading, folks. Never a dull moment. Zero DTE can be pretty crazy stuff. It's active. There's a lot of prep, a lot of planning. But what was the idea today? The idea was here's where we opened. We knew a plus minus. We had a couple of sticky points, and we built trades around them. So what did price do? Well, it cooperated, and it got near one of those sticky points that happened to be my best trade with the 20 wide, which offered the most profit. So it was enough to cover the risk on the other ones. Early in the day, it's not even 11 o'clock. I mean, I'm out with $220 before 11 o'clock. I'm pretty happy, and that was with 3 trades. That's kind of a lot. So do I love that? I mean, I love that I won. Just a trade. But I mean, ideally, it's like I'm curious at the end of the day, would I have seen more profit if I just held on to it? If we're hanging out at 69.90 at 7,000, does that work out? Maybe. I mean, maybe this would be worth $1,700 late today. But if it comes up here to like 80, 85 and it falls, well, I'm glad that I got out when I did. And, then maybe there's some profit trap stuff down here. So at the end of the day, I'll kind of give a summary like, well, if we didn't do anything, here's what would have happened. But that's not trading. That's not trading. That's in 0 DTE. That's not trading. That is getting lucky. Okay. If you trade 0 DTE, you should manage your trades. And so when I have winners on the day, I manage those winners. When I have risk on the day and losers on the day, I have it risk defined. So I know what my max risk is. And my goal really is to manage winners. So anyway, I just don't think that the market's going to reward you for luck. Not in the long run. If you get lucky a couple of times, sure, you can make some money, but you make some mistakes, the market will let you know. So we're trying to minimize those mistakes and make sure that we trade our plans. Okay, good. All right, Blake, let's fire up. I know we're going long today, but it was
You're
good
good,
session.
man. You're good. It's a great session. It's a good week. It's a huge week. So absolutely.
Yep. And so for tomorrow, tomorrow morning we'll do our normal routine and stuff. Tomorrow morning, just be prepared. We're gonna do a lot of calculations early in the day because we do have FOMC. Yep. So FOMC is a big deal tomorrow. I'm gonna set a chart. I'm here at 7,000. 7,000. Right on the round number. And what's interesting is depending on what price is doing today, let's say that we're up here towards like 7,000 plus. I might take a stab at that 3 p.m. trade that I talked about today. If it's up here towards 7,000 plus and it's beyond the plus 26, I mean, we had a high at 80 something, like 91, 69, 91 would be our plus minus high of the day. That would be market efficiency. So if we're there and we fall, I wouldn't be surprised. But between 69.90 and 7,000, if that market can sell off from those levels today, that'd be great. Anyway, we'll see. But otherwise, like profitable on the day. Let's see if we can carve out a winner for daily profit play and look for those updates in Telegram. All right, Blake, let's fire up daily profit play.
Fire it up.
David, it's in Telegram, man. I just updated it. I did a Telegram update for daily profit play members at 10:51 a.m. So the trades filled. We're filled for $1. I'm looking for 70 cents or lower to protect. That's what I put in for the Telegram.
Beautiful.
Yep, it's in there.
Okay. Here we go, guys. This is the recording from yesterday, so very recent. This was a really good recording. So
perfect. All right, I'll be answering questions with Blake. Thanks.
Okay, thanks, Chris.
Take the trade for the day and hold it for the day. It's a 0-day expiration. Okay, there will be losing trades. Look, even though I win, almost 90%, I still don't win all of them. So daily profit play is, and anyone that's in my daily profit play segments, by the way, or in my class and my master classes, how specific and how refined have we become over the last year and a half of this service? Pretty refined. I mean, we spent a lot of time together. I would say we probably had 10 plus master classes in the last year, and we just keep getting it better and more refined. And I'm not saying refined to cherry pick and optimize. I'm saying we are making good decisions to address, let's increase our probability of profit. Let's not accept more risk. Let's set our trades where we know exactly what our reward and risk is. Okay. So to me, this is probably the most it's the most active class because we do it every single day, but that also means that we have hundreds and hundreds of opportunities to trade. And if you are learning options, to me, this is probably the fast track to trading options because you get a rep almost every single day. And, a chance to really see from start to finish how an option trade plays out from start to finish. And that's really good. Okay. I'll show that. Let me get to the end here, Doug. That's a good question. Doug says, where are your favorite strategies? Actually, let me do this. I'm going to put a pause in this for 1 second and I'll show